Okay guys, and welcome to today's video. Today we're going to be looking at the smart money concepts, the order block theory, everything you need to know about the order block theory. So probably you're asking questions, what's order block? You'll be hearing about it, and you really want to understand the order block. In today's video I'm going to go in great details about the order block, and I'm going to be giving you examples and everything you need to know about the order block. All you have to do is just stay true to the end of today's video, and be sure to like the video if you find value in it. So moving forward, this is like a friendly call, as I always do in most of my videos. This to encourage aspiring traders, struggling traders, and also traders already on their journey to consistency. Just to tell you that there are three requirements for you in this business of trading. Number one is you must understand the factor time. Number two, you must understand the factor of discipline. And number three, you must understand the factor of patience. And as I've always said, time is the overall factor. If you can understand how to submit to time, how to wait in time, and how to understand that time brings fruition of everything, it is going to give you this succor in waiting for that particular setup that can land you the winner in your strategy. So with that out of the way, the second thing you need to look at is with discipline. You want to be disciplined with your strategy. You don't want to be trying this strategy today, smart money concept today. You're trying and using trend line tomorrow. You can learn all those things, you can have them, but you must have a particular your go-to strategy that you use every single day in and out of the market if you want to become consistently profitable. And the last of all is patience, which is also has direct relationship with time as always. So you need to be able to understand that patience is required. In patience you find diligence, in patience you find hard work, in patience you understand the whole elements of time and how it plays out. And mind you, in forex we have a theory of time and price. So time is very, very paramount in trading. So you must understand how to wait in time, and that ability for you to wait in time is patience. So this is just my encouragement to you. Sooner than later you're going to get to that desired result you want to see in trading. All you just have to do is submit to these three elements. So thank you very much, and let's continue. So moving forward, this is an overview of what we're going to be going through in today's video. Number one, we're going to be looking at who invented the order block theory, the idea behind the order block theory, what's the point for the order block, where to find the order block, which order blocks actually holds true, how and when to use the order block strategy, examples, then we're going to be concluding at the end of today's class. So content rather. So moving forward, who invented the order block theory? So as you can see on the screen, you can looking at the candlesticks right there. Some of you can pass this down. I'll pass it out as this is just an engulfing pattern, which you're not wrong, but that's what every retail trader knows, that is an engulfing pattern. And because of that, they don't understand how to use it and when it applies. Because this is beyond the engulfing pattern. It is an order block. We have on the left of the screen, we have the bearish order block, which is this one right here, and to the right of the screen we have the bullish order block right there. So who invented the order block? It's ICT, the Inner Circle Trader. He has a YouTube channel here on YouTube. He just came on few years ago on YouTube, and he invented the order block theory. So in other words, he invented a concept behind it, you know what I'm saying, which you're going to be looking and diving into this video. So for those of you that want to get to this channel, I'm going to be leaving a link in the description below. So you just need to get to him and understand what he talks. He talks about smart money concepts, institutional mindset trading, and the rest. So he's the one that invented the whole stuff. As far as I know, his personal name is Michael ODERBLOCKS, but he's popularly known as ICT, or the Inner Circle Trader. So with that out of the way, you now know he invented the order block theory, and it's all about the concepts behind it. So For those of you passing it out like it's just an engulfing pattern, in today's video you're going to see that it is more than just an engulfing pattern. This is an order block, and you're going to know why. So let's move forward. So the idea behind the order block theory, like I said earlier, there's a concept behind it. You want to say there's a concept why it is called the order block. So this is a location in price where smart money accumulates orders to either start a buy or sell program. So now some of you may be saying, for those of you that don't know what smart money is simply the small group of traders or small group of people that really control the price movements in the forex market or the financial market. So these are either the banks, not your commercial banks you have in your countries, but the institutional banks, and an extra group of people. You know what I'm saying? An extra group of people like the central banks and some other deep guys. You know what I'm saying? This is not a conspiracy or some sort. This is just the reality. These are the people that actually drive price. They make price deliver the way they do. But I'm not going to talk about the smart money right here. I'm going to be talking about them later on in another video. But what I want you to really focus on is on the order block. So this is a location in price where this smart money, they accumulate orders to start either a buy or a sell program. In other words, like you see the bullish engulfing formed, that is actually a location in price. What they were doing, they were either accumulating buy programs. They were either accumulating orders to start buy programs or to start sell programs. That's why at the end of the day, you find out this. You can now identify this as a bullish order block, or and this other one as a bearish order block. So moving forward, this can also be a location in price where smart money have their pending orders ready to be paired or triggered later in the future. So this is not just where they accumulate orders. They also accumulate pending orders. They also place their pending orders right there. Why? Because when they create these order blocks, definitely they will leave that order block and they will want to bring price down to that order block. That's the entirety of that particular concept, the concept behind the order block, because this smart money, they want to bring the price back to that order block. Why? Because they either have unpaired orders or pending orders rather ready to be triggered at that location. You want to say, if they don't have, they probably will just ride through that particular order block and make it invalid. You know what I'm saying? That's why some of you probably already know about the order block theory are finding trading the order block looking difficult, and you are like, it's not working. So in today's video, we're going to see how to really use the order block theory and strategy. So what's the point for the order block? Why do I really need to use the order block? So we're going to know that for sure. So this is an area of value or location in price, just as we have said earlier, that acts as an area of support or resistance for institutional minded traders. So in other words, the point for the order block, it's an area of value, or like we have said earlier, a location in price that acts as a support or resistance. Mind you, for retail minded traders, all they do is just draw a line on their charts at where they see price as respected for a while, at the upper portion and lower portion support, higher portion resistance. You know what I'm saying? But for institutional minded traders, we are not drawing our lines like that. We're looking at locations in price. You know what I'm saying? These locations in price act as our support and resistance for us, for institutional minded traders. And one of these location in price is known as the order block. There are other location in price which I'm going to be going in details in other videos. You know what I'm saying? But one of the location in price we're looking in this particular video is the order block. You know what I'm saying? So you can view it as an area of value or a location in price. It acts as a support or a resistance. So if it is at the upper portion, it is acting as a resistance. If it's at the lower portion of price, of a price range or the marketplace, is acting as a support. So that's where you now have either, if it is at the upper portion, it is the bearish order block. If it's at the lower portion, it is the bullish order block. So moving forward, where do I find this order block? So the bullish order block is usually found at the last down close candle right before an up move or impulsive price move higher. Like you can see with the diagram represented here, you saw let's get this out. So you saw this particular bearish candlestick. You want to see this particular bearish candlestick formed, started its open price right here. This, we marked it out here, and all of a sudden what happened? Price sold down, you know what I'm saying, and closed down. Like you see that marked place there, that region is marked there, that close price, you can see it right here, close price. So price closed down at this region, you know what I'm saying, and immediately what you see, you saw an impulsive price moving higher, which retail mind will perceive as an engulfing, but institutional mindset traders will see this as a bullish order block that's been created or formed. You know what I'm saying? So you saw immediately after the down close candle, we saw an impulsive price move, engulfing. I have to use that word so that you understand what I'm trying to say. Engulfing the bearish candlestick that just closed, the down close candle. You know what I'm saying? So you must know that the bullish order block is formed immediately after the last down close candle, after that is just right before an up move or an impulsive move higher. So this is how to find the bullish order block. And the next is the bearish order block. So it's vice versa. This is found at the last up close candle right before a down move or impulsive price moves lower. As you can see, price opened below and priced up, you know what I'm saying, closing upward. And immediately what we saw an impulsive move lower. You know what I'm saying, engulfing, closing in that bearish order block. So this is a bearish order block. So this is how the bullish order block and the bearish order block is found. So this is how to find the order block. This is how to identify and where to find them. You want to find them at that last close candle right before the down move for the bearish order block, and for the bullish order block you want to see it as the last down close candle just before the up move. So moving forward, which order blocks actually holds true? So there are lots of order blocks formed every single day and on all time frames. So you're going over your head, probably some of you already know about this strategy and you're like, there are plenty forming, which one should I use, which one should I use? Especially in the lower time frame. For those of you that like trading the 1 hour time frame down to the 5 minutes and the rest, like scalping or day trading and the rest, there are a lot of order blocks forming every day and you are going, which one should I use? So you may ask, which order block is worth my attention? Don't worry, I'm going to be showing you that straight away. As you can see right here on this particular slide, the order blocks on the higher time frames are the ones that actually holds true. They are the ones that are worth your attention. And when we talk about the higher time frame, we're talking about the daily, the weekly, and the monthly time frames. The daily time frame, which is the bank level, the bank time frame, this is where bank look to place their orders. The weekly time frame, this is where institutional banks and institutions actually analyze the price charts. The monthly time frame, this is the time frame where they used to do their analysis and where price will go, project where price is going to reach for, and what they're actually going to aim for in price. So these three time frames, whenever you see an order block formed in this one of these three time frames, they are very significant. You want to pay attention to those order blocks. They are not like the ones on the 4 hour, the 1 hour, the 15 minutes and the rest. So you want to pay attention to these three time frames, and when you see an order block, they are very significant. Only 99.9% you rarely find most of the order blocks on this time frame not old. And even though you have to find, you only find that on the daily, depending on, maybe you are looking at the market in a bearish tone, but actually the market is in a bullish tone. So it's created a bearish engulfing, created a bearish order block, and all the way it's clears that out, and you're like, why it didn't hold? You know what I'm saying? It's actually because the market probably is in a bullish tone. You know what I'm saying? So if you can watch my previous video that I talked about the AUDUSD analysis. So with that, you can see how an insights to how I analyze the market and to find which tone we are in the market for a period of time. So I'm going to leave that in one of the area of this video for you to find out, or also in the description. So moving forward, how do I use this order block strategy? First of all, we want to first identify this order block on the higher time frame. Just as I said earlier, the up close candle or the down close candle just immediately after an impulsive price move higher or lower. The next thing we want to see a retracement or pullback to that our wonderful order block that we have identified. Number three thing is that once price reaches the high, low, or open price or mean threshold of this order block, that is a signal for us. So the next thing we want to see the willingness of price to leave that level, either leave that high, leave that low, leave that open price, mean threshold of that particular order block. You want to say immediately we want to see a response in price. That shows us that there's an institutional sponsorship behind this move, that the banks, institutions are willing to respect this order block. So if price trades down into or up into the high, low, open price or mean threshold of an order block, we want to see the willingness of price to respond immediately. That tells us, yes, that this order block is going to form, is going to hold, and it's going to prove true. So let's see some examples. I know some of you will be like, oh, it's okay, enough of this, let's get into it. So let's do that straight away. So right now we are on the chart, and this is the AUDUSD daily time frame. And as you can see in the price action already on your screen, I have delineated a lot of portions on your screen, and I'm going to be going over them one after the other. But pay attention to every one place I marked up in this chart. Each of the things I identified are order blocks. They are order blocks that want your attention, and I'm going to be going over them from the first to the last to explain them one at a time. And you see that some of them vary from the order. You understand? I'm going to be showing you all of them. So without further ado, let's start from this one right here. Let's start from the first one right here on the screen. So let's zoom out. So right here on the screen, you can see right here that price traded down all the way from this point. You can see there's been a bearish tone down to this point, and immediately after this down close candle, we saw an impulsive price move higher. We saw an impulsive price move was higher, and you're like, FX truth, Isaiah, this stuff didn't trade down into this one. Yes, you need to pay attention to the price action. What happened? The next day, price traded higher, also encapsulating this one, including this particular candle. You understand? So we outlined this first, our bearish order block, and now we're looking at this one too, as including it as also our our bullish order block rather. So I all want to see price retreat into either this one or this particular one. You understand? And what do we have? Price move, and came into this price. Let me get the line out. Came into the open price. Came into the open price of this candlestick, of this particular bullish order block. And what do you see immediately after that? You saw a response in price. Price went higher. You saw a response in price went higher, even giving us 2,400 pips. You understand? So do you see how it responded on the daily? So now, if you move forward, you can also find that we have another piece of price action right here, another order block identified right here. So this is, mind you, this one down here, this for the bullish order block. The one up, what will it be? The bearish order block, exactly. So now, immediately after this up close candle, you see it wasn't like this one. Immediately after this up close candle, we saw a response down. You understand? We saw a response down, but not engulfing it. You understand? Not engulfing this candlestick per se. All of a sudden, we saw that engulfing happening. You understand? So this is truly the impulsive price we want to look at. We want to see. This particular candlestick right here is a particular impulsive price move we want to see. So immediately after that, what do we see? We saw price retrade. Even on this bullish candlestick, we saw it retrade into here, and it didn't actually hit either the low or the open price. So this is not what we are looking for. This is not what we're looking for. Probably if you have paid attention to this particular candlestick right here, this black one would have caught the move. Why? Because it actually pierced through the open price, almost getting to the mean threshold. So this could have been an entry for some of us. You understand? This particular region here. But let's pay attention to this candlestick, this particular one right here. We saw the way price came through and went into it. Let me draw that marker right there. Let me draw this out. So let me outline the open price, and the low is very small, so I'm going to ignore it for this particular section. So we saw price trade into that particular region. You understand? So you can go down to your lower time frame like the 4 hours. You understand? And you're going to see a quick response in price. You understand? You're going to trade that down. You see the way in price immediately responded to this particular order block right here. Everyone see, so this is and what it created? It created a bearish move downward, mind you, on the daily time frame. So let me just, for a quick example, let's just drop down to the 4 hours to see what we can how we can better time an entry from that point. So we saw that, good, very beautiful. So we saw an expansion lower, like right here. So this is the open price, and we saw price trade into. Some of us would have gotten in here with that particular daily candlestick right here. You understand? But if your stop loss was there, this particular pullback would have swept you out. You understand? So you want to see an impulsive move lower and a retracement higher. Sorry, yes, higher into this particular order block, and which is what happened right here in this day. You understand? And immediately we saw a response in price. So you would have entered right here, putting your stop loss above this region and selling it downwards. So let's get back to our daily time frame. So this is where we are in price. So the next one we want to look at, we want to see this particular order block. So why did I outline this one? For you to understand institutional order flow, you must understand that each of these locations in price form every single movement, in every single movement of price. You understand? And in this case, we're talking about the order block. So this is an order block right here. That's why I identify it. It's an order block right here, and it's also the bearish order block. You see this up close candle right here? It's a bearish order block. What do you see? We saw price retrace into it. Moving, mind I said, we need to, once we see an order block, if it's a bearish order block, we want to pay attention to the low. We want to pay attention to the open. I want to pay attention to the mean threshold. Want to pay attention to the mean threshold. When I talk about mean threshold, I'm talking about the 50% of your Fibonacci. When you draw, that's the midpoint of that particular candlestick. The midpoint. So that's exactly right there. The midpoint of this particular bullish candlestick. That is the mean threshold. You can use your Fibonacci to get that by drawing from the upper body to the lower body. That is it. Mind you, we didn't include the wick. Is the middle body we're paying attention to. We're paying attention to the body of the candle, not the wick, to get the mean threshold. So that's how I arrived at that mean threshold. Probably for some of you asking what's the mean threshold. So I've given you an example right there. So let's pay attention to that particular price action. So we saw price expanded lower and retraced into where? The low. Didn't get to the open price, but got to the low. That would have been an entry for us. Maybe you missed this particular one here. There's another one for you here. And what do you see? A response in price, what? Lower. Are you going to say lower? Even lower right into this particular order block here. And if you see, price even responded quickly into it. But let's not pay attention. I'm not teaching you how to catch moves here. I'm teaching you the order block concept. And moving forward, there's another one we outlined here. We saw this down close candle. Immediately we saw an expansion. We saw an expansion higher. And immediately after the expansion, what are we looking for? We're looking for a retracement or a pullback into what? The order block. And since this is a bullish order block, we are going to outline what? The high. We're going to outline the open. So let me get that one clear. So this is the high and the open price. You know what I'm saying? For this particular, and the next thing we want to look at what? Somebody tell me. The mean threshold. We want to pay attention to the mean threshold. That's the midpoint of this particular candle. So immediately after this expansion move higher, I want to see price retreat either to the high, either to the open, and either to the mean threshold. And in this case, price pulled back or retraced into the open price. And immediately after it traded into the open price, we saw a response, a quick one up. So if you had really understood this order block theory, you would have caught this particular move. So are you seeing the benefits of the order block? Something that retail minded traders will view as an engulfing pattern. Mind you, if it was a retail minded trader, they won't perceive this as an order block. They will perceive this, they will even perceive this as a an engulfing pattern. This would have been what is it called? This would have been like a either like a dark cloud pattern or something. This would have been like, I believe, a dark cloud pattern or something. This would have been what it would have perceived this as. Let me see. This would have been what would have perceived this as. So, but for institutional minded traders, you see we see this as an order block, and I'm taking you through examples. So the next example we have on our chart is this area right here. So you see, at this one you must pay attention very well. You see, I outlined all these up close candle and I encapsulate them as an order block. Why? Because all of them are bullish candle. You understand? And immediately, to show that they are order blocks, you saw an expansion lower, engulfing the entire one of them. You understand? Every one of them. So what do you want to pay attention to? So how will you get the open price? How will you get the low? How will you get the mean threshold? Very, very simple. This first candlestick, that particular area, that is your low that you want to pay attention to. Sometimes if it is a three bear pattern or three bull pattern, you want to pay attention to the middle candle, but in this case we have 4. So you really want to draw your you don't really want to get your mean threshold. You really want to get that particular one. But if it's for a 3 bear pattern, which I'm going to be talking about in another video, I can't talk about them unless I come across an example for you here. So let me just get this straight. So this should just be our mean threshold right here. Our mean threshold for this, sorry, let me get this straight. So this is our mean threshold right here. So that's the mean threshold. This is the low and open together. So what we see, we saw an expansion, an impulsive price move lower. And what do you see? We saw a retracement into where? Brother, what do you see there? Into the low. And also piercing into the open of this entire order block right here. So are you seeing? I'm giving you variations and examples. Are you understand? I'm giving you variation and examples. And what do you see immediately after that? You saw a response in price taking us lower, brother. So this works exactly on the daily, the weekly, and the monthly time frame. But I'm taking my time to show you this on the daily time frame to show you it works. And if you just look right here, there's another bearish order block formed right here. You can see formed right here. So immediately after this up close candle, we saw an impulsive price move lower. So let's say you miss this entire move, you didn't understand this particular, you didn't perceive this as an order block. Let's say for instance you didn't know that this was an order block. This price action right here was an order block. At least now you know that this is an order block. You see, price for institutional minded traders always provides opportunity. That's why I say you must avoid FOMO, fear of missing out, and floats, fear of losing trades. Even though when you lose trade, you know you could always come back. Why? Because price will always present you with an opportunity for a comeback for institutional minded traders. So what do we have here? We have our bearish order block again. And what do we see? We saw a retracement into where? If I outline that, into where? Into our open. Into the open of this particular bearish order block. And immediately after that, we saw what? A response lower. So I'll leave this for your study. This is the AUDUSD. There are other order blocks around this region, like here we see an order block. Right here we see an order block. These two candle, the double bull pattern is also an order block. So I'll leave that for your study. You can go through your charts. This is a recent one, November 2021. So you can go through it and identify those for your studies for the order block. So let's just come right here for our remaining examples. So right here we have this down close candle. Immediately we saw an impulsive move higher, and later on we saw a retracement in price down lower into where? Into our what? Our open price. Let's get that, sorry. Into our open price, you see. And what happened? Price responded immediately. Price responded immediately. So let's say you missed out here, which is not quite nice. Price actually retreated down into it. You know what I'm saying? entering deeper into this open price here. And what you see after that is also an expansion. But coming to this other example, we also have right here, we also have an order block too, a bullish order block. Immediately after this down close candle, we saw an expansion, price higher. We want to see that expansion engulfing that particular candle. I want to see a retracement into it. So if you pay attention, even at the open of this particular candlestick, we saw price traded into where? We saw price traded into where? Traded into the open of this particular candle. And what you see here immediately after that, you saw a response in price higher. But let's say you missed this particular move. If you look right here, you saw also a retracement what? Lower. Into where? Into the high of that order block. You see, there's always opportunity, brother. There's always opportunity also, sister. I know ladies are also watching this, so I'm not a feminist or whatever. I'm not a gender kind of person. So this for this is another opportunity rather in the chat. So if you have missed this particular opportunity, which I would have caught if it was me, or some of you would have caught, there's another opportunity right here which provide another opportunity. You know what I'm saying? So I believe this should be our last example. We also have another bullish order block. And how price expanded higher immediately after this down close candle. And what do you see? We saw price traded down into where? Into the open price. Into the open price. So let's get that. Into the open price. Are you seeing it? So there are a lot of plethorals of examples on this chart, on this particular time frame. If you look right here too, there's also an order block. You see price traded back into here. Let's say you also missed out on this one. What of this particular candle here? See this particular candle traded where? Into where? The low of this candle. Mind, this is the double bear pattern. I'm going to be talking about these patterns later on. As regard the order block theory, I'm going to be coming with these patterns later on, so you understand that we have the triple bear pattern, we have the double bear pattern, and the rest. And also what I'm showing you here, I've shown you the quad pair bear pattern and bear and bull pattern. I gave you an example of the quad bull pattern. So these are plethorals of example. And if you come right here, we have plethorals of examples right here. Because of time, I'm just going to be going over them quickly. So you see this order block right here. What do we see? We saw price retreat into it. So if you notice this one, this particular retracement in price actually defied our mean threshold. And yes, that could have been taken as a loss. Let's say, for instance, you put your stop loss in the mean threshold, which some people will actually do. That would have been taken as a loss. But if you put your stop loss just right below this low, that wouldn't have taken you out with this impulsive move lower. You understand? But notwithstanding, if you look also up here, right here, before even this down move higher, you see this up close candle, expansion lower. What do you see next? A retracement into what? The order block. Yes, what did it go for? It went into our mean threshold, just defiling it a little, which is what we also had at this region. So let me also put a marker on this one. You see, just right there, just defiling the mean threshold a little. You understand? And what do you see immediately? You saw a quick response in price, phew, downwards, and for this order block right here, upward, straight up. So let's take, for instance, you knew, okay, you understood institutional order flow, and you knew this was an order block and this was an order block, and at the time of your watching price, you knew that this another block and it has formed. What are you waiting for? You're waiting for a pullback or a retracement into either the low, the open, or the mean threshold of this particular order block. And in this case, we got it at the mean threshold. So this would have been your entry. But the question, where will be your exit? At this order block down here. You see, I'm already giving you how to frame setups using order blocks, using the bearish order block and the bullish order block. You understand? When you understand institutional order flow, you can be able to trade even at this small portion of this range, at this particular range here. You can be able to trade this particular range. Why? Because at this top part, you have the what? You have the bearish order block. At this lower portion, you have what? The bearish order block. And in this case, price just traded straight doing what? Going straight into the mean threshold of this particular bullish order block. And that would have netted you how many pips? That would have netted you probably 1,003 pip on just this small section of price action. If you had gone down to probably 4 hours to better time your entry, let's get that. To better time your entry, let me zoom out. You see the response in price very quickly right here. So probably in the London section, this is a retracement for those of you that are day traders, a retracement into here on the London section, which is what you have here. And what do you see? Whew, downward. For those of you that are swing traders, what do you see? You saw this candle 4 hours down, still you got your move. Are you understanding? So there's always opportunity, plethora of opportunity. So in summary and conclusion, all I want you to know is that there are a lot of opportunities for institutional minded traders. And when you understand this, when you develop and grow in your understanding of price action, that is from an institutional perspective, you'll be able to know that there are plethora of opportunities, and using the order block as a location in price, you can be able to frame your support and frame your resistance effectively. So with that out of the way, thank you for watching today's video. And if you find value in today's video, make sure you hit the like button, also the subscribe button, and also if you have any question as regard this order block or there are things you didn't understand, also leave it in the comment section, or anything you like particular about this video, just also leave it in that video. Make sure to check ICT, my mentor. I'll be leaving the link to his video and to his YouTube channel in the description. And also make sure to check out my other video where I analyze the AUDUSD, which is actually unfolding right now. I'm going to be coming up with a video about this one, this particular pair. I analyzed it on that video, and I told you how we are already in a bearish tone in the marketplace. I told you that price was going to retrace to this high, which it did that on that particular week and retrace higher. And now I'm already on a trade on this particular pair. I want to say, and I'm going to be showing you the results maybe when I come up with more videos on this particular pair. So you can watch for that video. I'm going to put in the link to that video. You can see that in the description, or also maybe around this section in this particular video. So thank you very much for staying through. God bless you, and do have a nice day.